G'day guys, welcome back to Pete's Investing. This is another stock chart update for NVIDIA. I did a video about a couple of weeks ago and showing you how the CCI, which we track on all our trades, it was giving us a bearish divergence versus the price. Hit this resistance up here at 518.52, and since then the CCI is still declining and the price is retracing back down to the downside. Now, I want to give you a bit of an insight here. We do track these divergences. You can see here there's a bullish divergence versus the price, and the price bounced. There's another little bearish divergence, or that was actually a double top on that divergence, considering a bullish divergence there. The price retraced, bearish divergence there. And I track these, and there's probably more back there, but I won't go any further back than this. What I want to show you here today is, apart from the fact that the price is pulling back in alignment with this divergence, I want to show you a couple of other things. So we've also got a back test here, and this goes back and does an average down on the trading, and this trading occurs as a result of this multiple moving average oscillator. So whenever you can see there, whenever it breaks to the upside, that's where you enter a trade, and it exits when it breaks to the downside, and you're in profit. Now here it's average down. You can see there it's added to our positioning. Back here, for example, it's added a position there. The price went up and it sold out with a profit. Entered another position there. Average down once. Price went up and it sold out with a profit. Now, a couple of things to mention is this back test runs throughout the whole time period. There's no discrimination of going long or short, doesn't take any consideration the divergence, etc. Now this is generated, if I go back to the start of this back test, go back to about start of 2004, end of 2003, it generated 24,906, and the baseline's 100,000, so it generated 24,906 in revenue. That includes $8 brokerage in and out of the trade. Now, one thing I want to show you as well is if you made the same trade using the stop loss method, this exits the trade with a 3% gain, and it doesn't average down until it's dropped by at least 3%. This stop loss method enters the trade in the same way when this oscillator breaks to the upside, and it doesn't exit until there's a 3% gain, or it executes a stop loss when it drops by at least 3%. So that's the stop loss method. You can see there the profit generated is 3,075. So again, both of these run back throughout the whole period with this oscillator breaking up to the upside. It's going long only. You can apply the same logic going short in the opposite direction when this breaks to the downside. Now, a couple of things to notice is when this oscillator shows a buy signal, if you're going to trade this in alignment with the CCI, you would not be trading this. For example, here you would not be trading this while the CCI is declining. So you want to make sure, you can see there that CCI here is showing a bearish divergence versus the price, and it's telling you to basically get out of any trades if you're in long in any positions, to get out of any trades and to avoid a collapse. So here it's pulling back. You can see there, so you would not have entered that trade on both the stop loss method or the average down method. So just go back a bit of history here. You can see there was a bearish divergence. The price is declining today. There was a bullish divergence here. The price accelerated, and again the bearish divergence here versus the price collapsing, and so on. So you would not have entered these trades when the price was collapsing. The other thing I want to mention as well is there's another indicator we developed recently. This is Pete's multiple indicator. Yes, I named that obscure name because it looks at the MACD, the stochastic, the RSI, the CCI, and a moving average. So they're all combined. When they break above the +3 level, it's indicating a potential bullish turn. You can see there while the price is declining, it was giving us a few indicators to go long, and in alignment with this divergence, you would have gone long, and that's where it's telling you there. Here, conversely, the price is moving to the upside. We're not saying you trade these to the downside here, but it's basically saying be careful because the price is starting to weaken, and it's giving you some shorting positioning. In alignment with this divergence, you would get out of the trade or short it at this point. Again, likewise back here when you're showing bearish divergence, versus the price is telling you be careful, get out of the trade if you're already in it with a profit, and take your profits. So again, this oscillator and this multiple indicator are both in the description below. Let me know what you think, but that's basically one way of trading using the trend, but also the divergence in alignment with these oscillators and these indicators. So let me know what you think. Give me some feedback. If you like the channel, subscribe and support us more on the Patreon page, where we also do weekly scans of stocks, commodities, and indices and currencies. So let me know how you go, and we'll touch base again in a future video. Thanks, and see you next time.